All right, real quick, promise. If you think your job's life insurance policy has your family fully covered, you might want to keep watching.
Agreed, Jonah. Because a lot of people think, well, my job gives me life insurance, so I'm totally good. But let me ask you this. What happens to that policy if you leave your job?
Poof, it's gone like your last vacation days.
Don't worry, Jonah. It gets worse. Most group life insurance policies only offer 1 to 2 times your salary. That means if you make $60K a year, your family will get anywhere from $60 to $120K. You better hope they're really good at investing in that case.
Now ask yourself, what's the purpose of having life insurance in the first place, Sean? Tell the people what they're missing.
The reason you get life insurance in the first place is to compensate your family and essentially bring them back to whole financially if you ever have a loss. But if you're insured through your work at 1 to 2 times your salary, your family isn't getting nearly enough money to even bring them back to even. Unless you come back from the dead in a year or two, but I probably wouldn't count on that. We suggest having enough death benefit to replace the amount of your working years you have left before you retire.
Right, including your raises and your bonuses. What about the retirement income you could have earned if you stayed at your job all those years? What about the investments and the cash flow you could have generated with that money? You don't want your family to be right back at it. And now without help or childcare just a few months after your passing, that's not even. You've got to think about replacing your income for the next 10, 15, 20 years. Or again, what if you're like an emotional person that just wants to sit around and grieve, be sad for a while? That's probably where I'm going to be. How long does 1 times your lost income go? A few months? Then you got to be back at work. Would that cover you, Sean?
God, no. Not even close.
Okay, let's not be too harsh. And let's be fair to group or work life insurance. It isn't all bad.
You're right, Jonah. But I'm not going to sugarcoat it and say that it's good either. It should be considered a bonus on top of your current coverage. Let me explain what it usually covers. A small death benefit if you pass while employed, which we already covered. Sometimes you might get accidental death and dismemberment, just in case you work at a job that's dangerous or you're in a car a lot or something, which subjects you to a lot of potential car accidents. Of course, it's usually free or lower cost, which is cool, and it's automatic, which means you often get enrolled without any sort of medical exam.
Right. It's a perk of your working situation. It's not a plan. It's like free water at the restaurant. It's there, but nobody came to dinner for that.
Exactly, and it only really helps if you're currently employed. Which brings us to the next part.
Let's break this down. Group or work life insurance normally does not stay with you if you leave the company. It definitely doesn't let you increase coverages without jumping through crazy hoops. It does not offer cash value, does not offer savings, does not offer long-term benefits, and most importantly, it does not cover enough to protect your family's future.
And even if they do offer supplemental coverage that you can buy, it's still tied to your employment. So if you switch jobs or get laid off, that's it. Poof, it's gone.
Here's the kicker, Sean. If you didn't know or realize or think about this, guess when most people lose their job-based insurance? When they're sick, disabled, retiring. You know, the exact time you actually need it the most. It's a terrible system if you're relying on it.
If you don't think that they know what they're doing, you're kidding yourself. By the time that you realize that you need real coverage, it's definitely going to be more expensive, or worse, you may not qualify at all at that point. So here's the deal. If you want peace of mind and long-term protection, you need personally owned life insurance, not just what your job gives you.
Think of it like owning versus renting. When you own the policy, you control it. You take it with you. It's yours for life.
And if you set it up right, it can do more than protect your family. It can grow cash value. It can be used for retirement income. It can even help your business.
Which is why we would recommend you to use your job's coverage as a bonus. Don't use it as your primary plan.
So if your family's counting on the life insurance policy you have through your employer and you haven't looked at your own strategy, let's fix that.
Click the link in the description and schedule a call. We'll help you figure out what real coverage looks like for you and your goals, for you and your family, for you and your future.
If you've heard about using life insurance for the living benefits of the cash value and haven't figured out just how to do that yet, let's fix that too.
Thanks for tuning in to the Banking Bros channel. We make finance simple and fun, at least we try to. If you like this video, leave us a comment. We'll see you in the next one. Peace.